much. To BP now, that company reporting a 17% increase in net income. It's booked billions from selling oil fields as it pays for the Gulf of Mexico spill. But if you exclude one-time items like those asset sales, the picture is a little less rosy because we're looking at a surprise profit drop of 4%. But investors, well, they seem to be investor reacting up, shares in that company up by more than 1% at the moment. So a slight move to the upside there. Optimistic that Bob Dudley can indeed get the company back on track, though it's not going to be easy because take a look at this chart. I want to show you this. It shows that the shares have actually become unhinged from the price of crude. So there you can see the price of crude going, well, steadily higher. Rivals like Exxon and Shell, a clear correlation there. Those companies tracking the 30% gain in oil since the accident. BP, though, bit of a divergence, you might say. The stock has been left languishing now, down 30%. So a clear divergence there. I want to get a shareholder's take on the earnings. So Christopher Wheaton's investment career spans 15 years. He currently heads a $250 million Allianz RCM energy fund, has around $20 million invested in BP, its largest single stake. And here he is, the man himself. Thanks very much for coming in.
Good morning.
Great to get your take on these earnings. I want to start by asking you about production. How badly will BP's drop in production? I think it was something like 11%. How badly is that going to hurt the company this year?
Well, 11%'s the headline number, but I think if you exclude divestments and also the effects of the higher oil prices, it comes down to about -7%. Now, that's a pretty big number, but still that's actually not that bad given the Gulf of Mexico moratorium, which has obviously cut volumes, and those are also high margin barrels. So the effect on the P&L actually could have been a lot worse than it actually has been.
So higher energy prices will be enough to offset it?
Definitely, and I think we're seeing that already, that you could have seen actually some numbers much worse, well, slightly worse than this, but it's the performance of the upstream business has actually been all right, considering the headwinds it's had in the Gulf of Mexico moratorium, and Gulf of Mexico being a particularly key market for BP to be able to get back to work in.
Yeah, I mean, that's the thing. How would you characterize these results overall? Because, as you say, I mean, they did slightly miss estimates. They had the additional charge from the Gulf of Mexico, but they did almost as well as they did about a year ago, even when you take this production loss into account.
That's why I don't think these earnings are actually that bad. I think, to sum them up, there's much work done, but there's much work still to do, I think, for Bob Dudley and the rest of the board of BP. What I think we need to see now is a return to work in the Gulf of Mexico, and that's not just for BP, but that's for the whole oil industry. I think that's an important thing. That
well, other companies have been allowed to return to work, haven't they?
And that's a gradual resumption of work. I think what we'll see as the year goes on is first permits being issued to BP. And I think that's going to be an important milestone, because it's going to mark part of the resumption of work in the Gulf of Mexico, of BP regaining the trust that it should never have lost with the US authorities and the US population as a whole.
And just looking at the chart there, showing a correlation between, as you usually expect, big oil companies, energy companies to benefit from rising commodity prices. With BP, that doesn't seem to be the case right now. They seem to be diverging from, they haven't been feeling the benefits from higher oil prices, particularly compared with some of their rivals. What should Dudley be doing to boost the share price?
Well, I think he should be doing pretty much more of the same, which I think is more asset sales. But I think what BP also need to do more of is make it clear that it's got the reinvestment opportunities available. And that's one reason I think why return to work in the Gulf of Mexico is important for them, because it's potentially a very high margin area of growth for them, because they've got existing infrastructure. Therefore there's a lot of cost base already installed there.
So that needs to be Dudley's priority, is getting back into the Gulf of Mexico.
Absolutely, as it was one of Tony Hayward's growth priorities.
Is that the case, though? You're seeing evidence of that? If anything, BP seems to be focusing more on Russia. What do you think will happen with that Rosneft deal?
Well, the Rosneft deal, I suspect, will unfortunately be stalled for the moment because of this dispute with AAR, their partners in the TNK joint venture. Well, I think that's frustrating. I think in the short term, that impact in the share price is quite disproportionate, as since the issue was being created with the lawsuit by AAR against BP, more than the value of the entire Russian business has been wiped off the value of BP shares, and I just think that's excessive. If you look at the total value of BP wiped off versus peer group, it's about $80 billion. Now, some of that's absolutely justified.
So BP should abandon the Rosneft deal?
I don't think they should abandon it, because it is a potential source of strategic upside in the future. The problem is, how can they come to some sort of modus vivendi, if you like, with their partners? And that's, I think, one area that Bob Dudley's going to have to focus on in the next few months to try and resolve.
Christopher Wheaton, great to talk to someone who's actually got cash on the line investing in BP. Thanks very much. Good to get your take on these earnings.